This is always the first thing I do whenever I open the chart. I'll first identify the highest and the lowest the market had gone. So there's also this level. Reason why I've picked this level instead of this one, it's because I want to take note of this breakout here. This breakout here. So that's the reason why I've chosen this point. So I'll also pin out this one. So after I do that, I'll know to say, okay, so this is what the market has been doing. This is what the market has been doing. So I'll try to zoom in to take further details for the market. So after that, I'll try to identify the trend. So by looking at the chart, we'll definitely see to say it has been creating stronger higher lows and creating weaker lower lows. So what I mean by stronger higher lows and weaker lower lows is this. I'll firstly identify the trend starting from the highest. Getting there. I'll get that point. So I'm more interested in this point here. That's what I'm more interested in. So excuse me. So after that, I'll try to identify those points I said it has been creating stronger lower highs and weaker lower lows. So what I mean is this. When you take a look what had happened this level and this level, these two levels, I've chosen these two levels because I want to make you understand what I mean by the market has been creating stronger higher lows and weaker lower lows. So this is what the market has been doing. When you check out here, you check out there, you check out here, you check out here, you check out here. There is something in common that the market is doing. There is something in common that the market is doing, and this is what it is doing. When the market changed the direction up there, it came down to this level which it had broken previously, which it had broken here. So what did it do? It broke this level, went up, came back to retest, giving a chance to more people to buy. Because your mentor told you that when the market breaks out, it retests, you enter. So it came there and started buying. So in the long run, people were scammers, but in the long run, the market was just trying to create a fake movement to make sure people buys here and placing their stop loss underneath there, a stop loss underneath there, they're stopped out. People were buying somewhere here. So people were buying there and they were placing their stop loss underneath there. And what the market did is it bought. So clever are those who had placed their take profits there, who had identified the first touch of the market after a breakout. The first touch of the market after the breakout. So clever are those who had placed their stop loss there on that point above there. That's on 21.22.1. So clever are those. But unfortunately, to those who were expecting for the market to come, break out, retest, and continue buying so that they can be regretting by now. Why do I say this? The market reached at this level. Instead of just retesting and coming back, what did it do? It came here, fooled more people that it will change the direction and come back. Then it went up, broke the level, and now it was dealing with people above here who were selling. So what I'm explaining is I'm trying to open your mind on how the market mover operates, on how the market mover makes the market. After it got there, they knew to say quite a number of people are selling on this level, and they're definitely placing their stop loss above this order block, because your mentor told you that when you place an order block, when the market touches there, you place your stop loss underneath or above the order block. So since they already know how your mentor has been failing, or how your mentor has been finding it so difficult to sustain his skill in the market, in the business, they're able now to capitalize on your mentor's knowledge to make sure each and every trader and below that mentor suffers what the mentor goes through. So what they did there was, after getting to this level, they had to stop out people who were selling. But in the actual sense, it was a good move to sell. So to prevent all this, better you become the last person to sell. How do you become the last person to sell? Make sure it just touches a certain order block once, wait maybe once, twice, then the third one, or maybe wait for a proper confirmation. So what I mean by a proper confirmation is this: there are scenarios where the market will come. This is an order block. Here. The market will come here. It touches there. It fools out people. Comes back to retest a breakout it had made somewhere. For example, there was a breakout here. To test it, so that it will enable people to start buying there. Then it pushes, coming to this level, and suddenly it changes. Maybe it comes to here, it pushes higher, then it sells, confirming a head and shoulders there. So confirming the head and shoulders, but this was a level most traders just wanted to capitalize on. That the market movers made millions, billions, and trillions just to wait for you to come and share what's left there, where everybody is busy eyeing, where your mentor has been teaching you to say that's where you make money. But in the actual sense, money was made up there. So what I'm trying to say is, don't neglect this part, and above here whenever you're thinking of placing a position. Don't neglect those parts, because that's where the market movers make money from. So after that, the market had come down, breakout, retest, and it continued. I might take the whole day explaining the history of it instead of focusing on the present action of the market. So that's our main interest for today. Remember, if you haven't subscribed to the channel, subscribe and hit the bell notification so that every time I'm having such content, you'll be notified. So let's focus on the current action of the market. The current action of the market is actually here. That's where the current action is. So we've had an idea of how the trend is moving, the trend of the market, and what we are focusing on. So we'll definitely go in lower time frame. I'm sure I'm having quite a number of day traders with me here, so this is what we'll definitely look at as a day trader. So definitely try to go in an hour time frame. In an hour time frame, I'll also do the same thing. I'll try to identify the highest it had gone in that specific time frame and the lowest it had gone in this specific time frame. So the reason I'm doing this, it's because I want to know the flow and the ceiling of the market. Remember, those 2 points are the points that the previous action will try to respect again in trying to balance the market movement. So after I get those 2 points, I'll try to pin out, I check and see more breakouts in the market. So in this case, I'll try to use some horizontal trend lines, horizontal lines, and so that it won't be too bulky on the screen. It won't be overloaded with a lot of objects. I'll try to use smaller lines so that you can definitely identify, you can see the movement. So I'll try to check out that level. The reason why I've chosen this level is because if you take a look, there was a breakout there. In respecting the trend, that's our trend of the market. So definitely it's creating a stronger higher lows and weaker lower lows. So where is our higher high and our higher low and lower low? So that is our higher low, and that's our lower low. Higher low, lower low. Yeah. So after that, I'll also identify more levels where the market has been making turns. Yeah, I'll put it in layman's language, where the market has been making turns. Because for the market to change direction, then there is action. For the market to change direction, then there is action. So those levels where you see the market was going up, it changes, it starts coming down, then there was action there. And there might be action again. Same implies with Forex or synthetic indices. So if it's Forex, maybe it was fundamentals, maybe there was something that had happened in that specific country that made the market to change direction. So for every market direction, that should always each and every market direction there is action. So after I take note of that, I also take note of this. You should really take note of the points that I'm taking. And what it's saying. I'll start explaining after I pin out these levels. I also take note of this level. I'll also take note of this level. I'll also take note of this level. So if you take a look in all these lines that I've drawn, the market has been respected. The market has been turning from your left to your right. So what I mean is, if you take a look what happened here, you take a look what happened there, you take a look what happened there. When you take a look what happened here, you take a look what happened there and there and there. So for every market change, there is an action. There is an action behind it. So how do I approach it as a day trader, or how do I choose this level I can place a position in scenarios whereby in a scenario where you're trading synthetic indices which are not fundamental related? So once I pin out all these levels, I'll know as a trader, I'll know to say, okay, when the market gets to this line, there will be action. So what am I trying to say? Here will be my the main focus of my interest. So I'll be more interested to see what will happen when the market gets there. But in a scenario whereby the market now, when it gets there, it will be too close to my trend line. So either ways, it would need to respect my trend line. So meaning, from this level, when the market gets here, we might see some market movers trying to make some profits around this level, because they know people here will try to enter with some sales. So people there will try to enter with some sales, and they will definitely place their stop loss above there, which is a very wrong concept. Just like your mentor told you, it's a very wrong concept. Reason being, you've placed a stop loss in the zone of your enemy. That's where the market mover is seated, waiting for you to place the stop loss there, so that once you place your stop loss there, they'll come here and try to respect the trend line. That's where we'll see the final decision of this trend. It will be here. But nonetheless, it will be a three-way battle. Reason being, from there we might see more drama up to this level, trying to stop out more people. So when the market gets to that level, it will be a very interesting trade, because the market has got pure confirmations. There was a retest there, there was a retest there, there was a breakout, there was a retest there. Take a look at that. There was a retest there. So meaning this level here will be a very interesting level. This level here will be a very interesting level because it's a strong level. It's a strong level where now we would see those people I said, people who trade like I trade, people who trade like I trade will be the last ones to enter, because now this will be my interesting level. Either ways, I know to say once I place some positions, I'll make something. Definitely the market will react here. It won't be an easy game. The market will react here. We'll see it even coming up to there. The market coming up to there. So we'll see the market coming up to there. So once the market comes up to there, we'll confirm either the market will be changing direction, going up there, or the market will continue with a sell. But either ways, I would have still made something there, and this level will be my first take profit. This level will be my first take profit. Reason being, to another level which has shown some strength, which is this level. Hope you're following me, guys. Which is this level. Reason being, after the market got to this level, we saw the market failing to break that level further. It failed to break that level further, which we saw it coming, retest it, and coming back, and it managed to break. But nonetheless, there was too much action. If we take a look at this level, the white level, if we go in lower time frame, you'll find that there was too much action. You can take a look, you can see what was happening. There was too much action here, meaning it's a strong level. So if I had executed my position there, then I'll place my first take profit here. These will be the things that I'll be interested in. I'll just be interested in with strong levels for me to place positions. It's not each and every breakout and retest that you can trade. It's not only every breakout and retest that you can trade, but only strong levels. Strong levels will lead you to better results. So I had a lot. I remember a certain day when I asked people to share the most challenges that they've been having, and quite a number of response was finding a better entry point. In short, people were complaining that they don't know when to execute a trade and when to close a trade. So if somebody doesn't know when to place a trade and when doesn't know where he can place a stop loss or a take profit. So in a scenario that you are taking positions at this level here, remember your stop loss must be very much far to respect this strong level that the market has been finding challenges to break. This level will be your source of strength to hold a position, and you just know to say, if I placed my positions at this level here, then my point of strength is this. This is the shield I'm having. Even if the market comes and breaks this level and stops me out, then I did a very good job. But it won't be easy for the market to come and break this level, going there to stop you out. But the strategy your mentor told you, that you place your stop loss above your order block or maybe your entry point, then that strategy is the one that has been making you to fail It's the one that has been making you find it so difficult to place position what he was doing, for which he lied. But in this case, I'm saying you should have shields, you should have point of strength whenever you're approaching the market, and that should be your entry or from being hit. So it should prevent your stop loss from being, even when you place your stop loss there, you've given enough market, depending with your account size, you've given enough space to the market so that it can run. So after that, now I've got an idea of what the market is doing, and it's in higher time frame. It's actually in 1 hour time frame. Then I'll try to find my entry points. So I'll try to look at my analysis in lower time frame and try to identify more information on what the market had been doing. So I'll try to go in 13 minute time frame. Try to see what the market has been doing there. So the market, even in lower time frame, the market has been trying by all means to respect our analysis, meaning we are having a better view of the market. On the other hand,